Oh, hi everyone, and welcome to the last of our webinars today, where we're going to be looking at day trading stocks. Those of you, I know some of you who have already been with us on the previous one when we looked at the futures, but now we're going to be focusing on stocks. But before we start, as you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Very quickly, because we do have some new people joining us today. We're going to be looking at the charts through what we call the prism of volume price analysis. It's a methodology that my husband David and I have been using for nearly 20 years, and it's really looking at the relationship between price action and volume to try and help us determine where the price is going next. And this is the book that you can find on Amazon, where the concepts that make up the methodology, you can discover more about it there. And what we've also done is we've put together some worked examples of the methodology in a companion book. This one does cover stocks quite considerably and across all time frames, because it's not just in the faster time frames but also in the slower time frames. Also includes some indices and commodities, but in a way, in a sense, the ticker that's at the, the symbols that at the top of the chart is irrelevant in the sense that when you're analysing the chart, looking at it from a VPA perspective, it really doesn't matter what it is. I mean, obviously you have to be aware of other factors that might be driving that chart. If it's a currency, you'll be looking at what the central banks are doing. There'll be fundamental releases. If you're looking at commodities, you maybe want to know what the US dollar is doing, because there's a relationship between the dollar and commodities. Bonds, you may be looking at market sentiment, etc., etc. But when we look at it from a chart analysis perspective, it really doesn't matter. As I said, the everything will be on that chart, and we say it is the foundation. You really understand there's this very important relationship between price and volume. To that, we've added candles and candle patterns and what we call support and resistance, not just price-based support and resistance, but volume-based support and resistance. And support and resistance, some people, supply and demand, it's areas, it's those levels on the chart, those key levels on the chart where price is either going to reverse, maybe just stage a temporary correction, and if it's in a congestion phase, it's possibly going to break away. And on top of that, you can then add your favorite indicators and tools, some standard ones you can see here: Bollinger Bands, Elliott, stochastics, fractals, moving averages. We have proprietary ones that we've developed ourselves, and you'll be able to see them in action on the charts that we have for you today. And overriding all of it is what I've put this here. We put this time, and time in the sense not just the time, the time chart that you're trading, although sometimes we trade non-time based charts, i.e. tick charts and Renko charts, but we look at those in multiple time frames, so you just don't focus on one time frame. You look at a faster time frame and a slower time frame for some context. Right. Last week, we started this new set of webinars where we were looking at stock trading, and I just outlined in that webinar the different methods that you can use for selecting stocks, because as a day trader in stocks, you have this decision to make, in as much that do you simply try and find a trading opportunity as it is going to appear as and when you are at your screen. But as you know, unlike the forex market where you've only got a choice of 20, well, generally 28, there are hundreds of currency pairs, but in the main, forex traders stick to this selection of 28 pairs. But with stocks, you've got hundreds of stocks. Where do you start? What kind of selection process do you apply? What filter do you apply? And that's what I laid out last week. And there are, I can count how long's a piece of string, basically. But what I want to have a look at today is a method of using, so if I can find it in a second. Oh, here we are. Stocks that are heavily shorted, and this is particularly appropriate given what is going on with Gamestop, as you are probably aware, which is now, I think, the most shorted, has been the most shorted stock in the market, and has been, if you like, there's a battle royal going on between, if you like, the professional money in the form of hedge funds who have, piled into this stock and taking big positions in terms of, putting short bets on, because they are of the view that the company may be in trouble, and the price is going to go down. And on the other side, you have, is it called Wall Street Bets, David? Wall Street Bet, a group of, if let's call them activist traders on Reddit, who seem to be taking the hedges directly, and have been through calls, and we'll talk about how the option market can also provide a means of helping you with stock selection. But at the moment, I just want to look at stocks that are heavily shorted. So, well, how does that help me if I'm going to be a day trader? And the reason is this: when any market is very, very heavily shorted, what tends to happen is we'll then have a short squeeze. In other words, the price will, the buying will come in, and the shorts, as they call it, the shorts get squeezed. And oftentimes it can actually, they then have to cover those shorts, and they then have to join the buying that then comes into that particular stock. So you say, well, where do I find a list of the most shorted stocks that are out there? And this is the site. This is called highshortinterest.com. It's not all stocks that are heavily shorted. It's just the ones where there is the biggest short interest. And right at the top here, this is all of them. And in fact, there's a total of 67 in total. Now, usually you would find a lot more, but given the way the market has been since the last correction, the market has been in a very, very strong uptrend. The shorts have gradually left the market, and we're in a position now where the positioning of the market is almost everybody's long. And when you get this asymmetry and you get this everyone tipping over to one side, it also tells you the market becomes very, very fragile. If you head over to my blog, annacooling.com, there is a post on there which explains this in more detail, and with particular reference to the YM. And there's a very nice VPA lesson on the daily chart, which kind of, was an early warning signal of what we are actually seeing at the moment. So what we're also seeing at the moment is a very strong message going out to the FOMC, because we have the meeting later on today. Just very quickly on the news, what do we have? Yeah, it's 7 o'clock our time. Got the interest rate, we've got the FOMC statement, and clearly the members of the Fed will have been seeing a kind of, is it carnage out there at the moment? Well, it's not as bad as it has been. The Dow futures are down 350, although they are coming back a little bit. And what the NASDAQ is doing? The NASDAQ, yeah, this is the daily candle for the NASDAQ. As you can see, a bit of a heavy down day, but the buying is already coming back in. But to get back to the stock selection, this is a really nice site that I've come across, and you can go through the stocks, look at the charts, and basically see, are we likely to see a short squeeze, or is it still in a deep waterfall? So what I've done, and because we're going to be using the Tradestation platform for these sessions. Last week it was the first time I'd really kind of put it together, and I hadn't quite got my act together, as it were. And I know the resolution on my screen was it was very, very small, but as one of our attendees helpfully said, if you're watching on Chrome or what have you, just expand your the resolution on your screen, and you should be able to see it a little bit more. But I've done it here. What I've done, I have 3 time frames, and I have the 3-minute, I have a 10-minute, and have an hourly chart. And what I've actually done, this was Kellogg's that we looked at last week. I've taken actually the 3 stocks from that list, just 3 of them. This is Bed Bath and Beyond. This is a pharmaceutical stock whose name I've already forgotten. It is Ligand Pharmaceutical, and I've actually put GameStop on there as well. And it's quite ironic about GameStop is that another reason why the price has soared higher is that Elon Musk as well has come in and given his kind of, not his blessing on it, but has commented on what is happening in this stock, in terms of the one particular hedge fund has now I believe removed itself, has closed all its short positions. In fact, I had it here. Let's have a look. Hedge fund Melvin Capital closes out its short, and it has lost apparently a huge amount of money, although I believe it's been bailed out by I think Citadel. Anyway, it's quite ironic that he should make the comments at this time, because this time last year, and I think I mentioned it last week, Tesla was one of the most heavily shorted stocks in the market. There's all sorts of reasons why hedge funds, traders short stocks. They see it as an opportunity. That the company is not on solid ground. There could be fundamental reasons, there could be technical reasons. There's all sorts of reasons, and they build up these huge positions, millions and millions and millions of dollars worth of positions. But in the case of GME, they have been taken on, as I said, by the activist traders who are on Reddit. So let me just move that. Let's see here. Let me just see what the chart looks like at the moment. And of course, it is highly volatile. In fact, let me just expand the hourly chart. I'm not going to look at there we are, where I think it's hit an all-time high at the moment. And we can see here, in fact, I think it had a gapped up open. Volatility was triggered. As we can see here, this is the trigger of this is our volatility indicator. And we have volume price analysis, as I said, that looks at the price action and look at the volume. But when you look at the shorts of the kind of stocks that are you want to take advantage of a potential short squeeze, in other words, it is going to go higher. They come with there's a price to be paid for that, and the price is volatility. And with volatility comes momentum, and also very, very sharp moves one way and then another. And the way you can make that work for you is, first of all, obviously be aware, but try and first of all identify that volatility and understand what is then going to happen as a result of that volatility by using, as I said, an indicator such as we have developed. This is based on, we measure volatility in 2 ways. You either use standard deviation, which is what Bollinger Bands are based on, or you can use average true range. And this is based on average true range. And essentially what happens when you have a trigger of what we call the volatility candle, particularly in a slightly slower time frame chart. This is the hourly chart, and we can see here we've had the initial, almost an hour. We've had the initial, we had the rush up, and then all the way down, and then we've had obviously the volatility triggered, because that is outside of the average true range for this particular time frame. What then happens is the price almost always, I can't say 100%, I say many more times than it doesn't, it will reverse back into the spread of the candle. And we have traders on our Forex students who simply wait for these signals. And in volatile stocks such as a GME, this is going to happen all the time. So you could almost say, right, wait for the volatility. What is the reaction going to be? Well, actually, this actually triggers in real time, so you know that is coming in immediately. What it also does, it's particularly as you're coming to the end of the period, this is for the hour, and you've got the drive higher. This, the activists are out there driving this price even higher. They've seen off Melvin Capital. There's lots more shorts out there. They're really going to squeeze them hard. You're going to get a reversal back into the spread of the candle. That's what you can take advantage of, particularly if it triggers in a slower time frame. And I personally think the hourly chart is a good time frame to wait. You have to be a little bit patient, but when it does trigger, you can then take advantage of that opportunity. And what I've done with Radarscreen here is we've loaded up some of the indicators that we have here. Obviously, I've got the ticker. My 3 time frames. I've got 310 and this is my 61. This is the one that I'm interested in. In fact, there's also been a trigger on this is Kellogg's that we looked at yesterday. There was a trigger 6 bars ago on Bed Bath and Beyond, and there's actually a volatility ongoing now on the pharmaceutical trade Ligon that we've got here. But let's look at this one. This is actually ongoing here. It's already got to a high of $354. It's trading at 382. This is the high. This is clearly where it wants to aim for. We've got the trend. The trends are blue in the faster time frames on the 3-minute chart, and we've got the trend monitor also blue as well. It is fast. I'm not saying this is for everybody, but it's one way that you can actually make the volatility work for you if you understand what is how the price action is going to react once you get this injection of volatility and momentum, because with volatility you get a lot of momentum coming in as well, how you can help you to take advantage of it. And what I've also got the support and resistance indicator up here, and it tells me I've actually got some the nearest support and resistance line that I'm likely to be facing. But so what the radar screen is, so if you have a whole host of these and you're simply waiting for a particular signal to tell you that there is a potential reversal coming, because that's what happens once the volatility indicator is triggered because the price action is outside of the average true range, then you could certainly use it in that way. So let's have a look at the on the 3 minutes, see what's actually happened. And we are here. This is, as I said, on the 3 minute. It is moving higher. Not a huge amount of volume underneath it at the moment. It's bounced off this this level from the VPOC. Where are we in terms of level? We're at the as you can see, we're sort of at the R6 at the moment. So if it's going to go higher, we know what the high of the day is, and that's certainly the battle that is being fought out there at the moment. And but that's what was likely to happen, simply because of the hourly chart. Let me just move this out of the way if I can. As I said, the trigger of this, I can't get this. I'm going to have to pass back over to David, and maybe he can take up the narrative for GME. I just happened to choose GME because I was going to look at selecting stocks based on the ones that are the most shorted. GME is all over the media at the moment, and it's just one way that you can take, as I said, take advantage of volatility if you understand how to recognize it and what is likely to happen once you have a something like our volatility indicator triggered. I think it's come back. Hold on. No, it hasn't. It's still locked. So I'll pass you back to David. If you've got any questions, just please put them in the chat box. Happy to answer them on anything that we say or that you see on the screen.
There we go. Hello, everybody. Good to have you back with us. Hopefully you can see my screen just looking behind me, and that's great. Okay. I'm just going to start with just go back to the indices because they are reaching, they're all reaching sort of pause points. We've had the recovery. It's, I mentioned it in the previous session that, it was shaping up for something to reverse because we had, I think it was on the YM particularly, I think it was the five minute where we had this nice volatility candle, volatility again. What are you expecting? You're expecting one of two things. You're either expecting congestion or you are expecting a potential reversal. And here, as you can see, we've reversed all the way back up to the volume point of control, which is now settling. It's very close up here. I think it was just sat here. You can see the volume building. And I'm glad it's moved because the volume point of control is not a it's not a lead weight that sits in one place all the time. It's not an anchor. It will move around according to how the volumes are constantly rebuilding all the time. And obviously it will sit at the extreme of volume. These two are very, very close at the moment. And it's just hopped down a little bit. But basically we have moved back to the volume point of control. The volume has fallen away, but then as I said before, this is the sort of thing you're expecting to see anyway, this massive surge in volume, and then it gradually falls away as the session gets into full mode. So we've obviously gone back to the volume point of control on the YM, and that is also true of the other two as well. This is the NQ and the ES. So we're trading around that right now. It's no great surprise because we've got another 2 or 3 hours or so to the big announcements coming later. So the markets are going to be waiting and watching on that. Whether there is any further demonstrable price action, it's hard to say. Just pulling over this chart on the CSI, this is basically risk off. These are safe haven currencies, so you would expect them to be rising strongly, which they are. That's the dollar, Swiss franc, and the yen. Down the bottom here, the commodity currencies, they are selling off equally sharply because they are selling off on risk. Simple as that. Just go over onto the stocks page. I have actually got, there we go. I have actually got GME up down here. I'll pull that up in a moment. But the one I've just, other end of the spectrum, if you will, I've actually gone to GE, dear old stock that we have a very fondness for lots of different reasons. We used to know them as customers many years ago in another world, and they've been through tough times. If I just pop open this is the weekly, going way back. There we go. Let's move the chat box out of the way. When we were trading them a long time ago, we were trading them on covered calls. They were up in the mid 30s, 30, 32, 33, 34, $35. That is the decline of GE. Lots of reasons for that. And for longer term investors, there's always an opportunity for a company of that size to recover. And it becomes at $6, you think, well, blimey, it was at 36, 35, $36. Now it's down at $6. Will it ever get that far again? It may do. It's a question of looking at the volume and the price action and how it's shaping up. But just on an intraday perspective, this is on the 10-minute. I've got the 5-minute up here, so it just gives you a very different perspective. Just pop this one up, but just really to show you that it doesn't really matter what you're trading or how you're trading. The indicators VPA applies in exactly the same way, irrespective. Excuse me one moment. Sorry, I had a frog in my throat. This is the pre-market here, which is why it looks a little strange. It had the volatility trigger here. And what a lot of intraday stock traders will do is they will consider this very carefully, what is going on in terms of the pre-market, because they're looking at that in terms of what levels. I mean, the volume down here is tiny. You probably can't see it. It's there. I mean, if I pull this right the way out, you probably could see it just. That's the sort of level of trading in there. So it's not so much from a volume perspective. Watching the pre-market is much more to do with establishing levels to either set your stop loss or for levels that have to be penetrated once the cash market itself opens. And that's why the pre-market is so important. You can see it here. We had this channeling going on. A lot of resistance. These two levels would on the accumulation distribution indicator. These are very strong. This has been tested 7 times. This has been tested 6 times. But as a cluster together, in terms of price action coming up from below, that is a very strong area, huge area of potential resistance to any recovery if the market is going to come up through here. And of course, it's a great place if you're looking at it, think, okay, well, maybe I'll just move that out of the way. Maybe I'll put my stop loss up here at 1140, maybe 1145, somewhere up there, in terms of potential shorting opportunity. And that's why they're so important. You've got another example here. The accumulation distribution, what it does is it actually presents a visual representation of strength and weakness by virtue of the fact that it paints these levels according to their strength. Each time one of these is tested, then it gets thicker. It's a bit like a Popeye and his spinach. The more he eats, the bigger his muscles grow. Well, it's the same here with the accumulation distribution indicator. You can see these levels up here. These are relatively minor. They've only been tested once in recent past. But when you get 2 of them acting as a little cluster like here, it becomes a little bit stronger. So where you get clusters of levels which on their own are relatively weak, then when you cluster them together, they become stronger. So we've got very strong level here. This is our pre-market. The market sold off quite strongly, no great surprise. It's kind of reflecting what is going on right now in terms of the major indices. Although having said that, don't always expect every stock to do what the major index is doing. Generally speaking, they will follow it to a degree, but not always. You'll find markets falling and obviously stocks will be rising in there. Not everything goes up and down in a linear fashion with the index. That's a question looking at the individual charts. But generally speaking, this is pretty much what we've seen for GE, which is more or less what you would expect. We've had the sell-off. We had 2 volatility triggers. Then we saw some buying coming in under this particular candle, nice hammer candle with decent volume. Then we had the little rally, but the rally itself is not looking particularly strong. Why? Because the spreads are not only narrowing, but the volume is also falling. We've hit a very minor level of resistance here, tried to get through there, tried to get through there. So it's not, it's not particularly strong. The rally itself is pretty weak and weedy. And overall, in terms of general direction at the moment for GE, certainly on this time frame at any rate, it is still bearish according to the trend monitor. So that's on the 10-minute. Similar sort of picture on the other time frames. Let's go up onto 5-minute. There we go. This is a sort of expanded view, if you will, of the pre-market here. We had this rally at the open, shot up, shot down, volatility trigger on there. It's what you expect to see in here, tiny volume. Then the market gets underway. Then we start to see the buying coming in. We had 2 goes at it here, weakness here, but then the buyers step in, a little bit more buying here. So we've got 2-bar arrangement here, and that's what we're seeing right now. And then we've got up here, and now we're starting to see this weakness rolling back down onto the volume point of control. So in terms of GE, probably going sideways for a bit now. Let's go and have a look at the one Anna was looking at, which is this one, which is GME. Let's wait for that to load up. So move the chat box out of the way. There we go. This is on the daily chart. Hugely volatile, as you can see. This is where it was, $20, $10, almost flatlining down here, but there is price in there. And then in the last few days, it's done this, absolutely skyrocketed up. And of course, massive volatility associated with that. And it really doesn't matter what charts you look at. This is 15-minute. Again, volatility in evidence, market shoots up. Volumes, not great under that particular candle. No great surprise to see it sell off now. It's recovering. It's all over the place. But if you understand volatility, as I always say, if you're in a position, it doesn't matter whether you're in the stock day trading or whatever it is, if you've got profit in that position and you see a volatility trigger in your time window, if you're trading, I don't know, 1, 2, 3 minute or 3, 5, 15 minute, whatever it may be, if you get a volatility trigger in there and you've got profit in, then, you know, rest assured, I would say 99 times out of 100, I'll take the profit off the table, bank the position, close out, and just wait. Because do you want to sit through congestion? You certainly don't want to sit through a reversal, but a congestion is just as painful because it brings in the element of time. If you're sitting there and you've got a profit and you're not entirely sure what's happening and it starts to drift against you, maybe goes sideways, you're sitting there waiting, just close out, get out the market, bank what you've got, and then wait until the market settles again, gets away from that volatility trigger, and then you can jump back in again. This is on 1 minute. See where we're going on 1 minute. And you know, this is a stock, but it could be anything. We've got this very strong level of resistance up here. You can see it's been hit twice here. Trying to get through 340. It's going to have another run at it. And just the reason the volume is distorted over here is because we've got this big spike over here. I'll just try and pull that out a little bit. That makes it huge. I'll probably leave it where it is. There we go. It's going to try and run through here. If it gets through there, then of course and closes above it, there's two reasons to expect it to go higher. First of all, you've then broken through that what was resistance. Obviously, that is now acting as support. You can see it kind of testing it back down there. And secondly, you can see the volume here is practically falling away to nothing. Now, this is a sky-high stock, so you wouldn't expect a huge amount of volume anywhere up here anyway. You have had price action over here as has been in that particular area, but the volume here falls away dramatically. So you would expect the stock to move through there relatively easily. In other words, it doesn't need as much volume to drive it through here as it does to drive it through this area. And that's the beauty of seeing volume presented in this way on the y-axis. It's the combination of volume, price, and time. Down here, we're looking at the linear relationship between volume and price. But on the y-axis, we're looking at the relationship between volume, price, and time, because the longer the price action sits in a particular area, then the more that volume is going to build in that area. So we've got a big wedge of volume here. Now we're moving on higher up the chart. Let's go up to another time scale. See where we are. We had, let's see, we're trying to move up to this sort of level here, up to where we were before. Let's go down to another time frame. There we go. On 2 minute. Decent volume under there. A little bit of support coming in under that one. Lots of volatility. Trying to break away from the volume point of control. Want to see some decent volume coming in under this next candle. This one's fine. Volume and price in agreement because we've got a nice, decent candle. Solid candle. Good volume under that one. That's fine. You know, no problem with it. Lots of support in below in terms of price-based support, in terms of these clusters here. This is very strong, these regions here. So a huge amount of support under here. And once again, we've got the volume falling away, but we're coming up to this area which has caused the market to pause before. So is it going to cause it to pause it again at 350, or is it just going to blast through that and go rushing all the way up to 390? See what the volume is coming in. Right down here again. Stalling a bit around this level. But still primarily bullish. Just pull that up and neaten it up a bit. There we go, move that up there. Move that one up there. And that's what the trend monitor is telling you at the moment. The trend monitor is telling you bullish on the 1 minute, bullish on 2, bullish on 3, bullish on 5, bullish on 10, bullish on 15, and bullish out to this one. This is 15. I'll move that over to 30. It's that same chart. Let's just change it up to 30 minutes. There we go. Okay. But essentially, that's what it's telling you. So across the time horizons, whichever you care to choose at the moment, it is bullish. We've come out of this phase here. We're now in bullish mode, breaking up. Looks as though we're going to, try and push through up to 350 and maybe beyond. That's fine. Nice widespread candle, good volume under that one. Bit of indecision under this one on 5. That's a bit of a doji candle. On 10 minute, we look okay. Let's have a look, another look at 10 minute. That's okay. as I say, you've got a lot of volume over here, which is pushing down this volume over here. So if you want to pull that out a little bit, get it more demonstrable, you've got to do that to it. Now we're up to 348, moving nicely, 349. Here we go up to 350, through 350, up to 358, really moving nicely now. Nice stop, you know, but extremely lively. And you have to be light on your feet, not staying too long. Up we go. Through 350, up to 360, 65, 66, 67. The reaction lower, buying, reaction lower, buying. So this is supported at the moment because in each reaction down, the buyers are stepping in saying, okay, well, I'm going to buy at a cheaper price then. I'm going to buy at a cheaper price. Fine, okay, market reacts, I'm going to buy, I'm going to step in and buy. Now the volume's coming in under this candle. Be interesting to see where this candle closes off, because we've got rising volume, we've got higher volume than any of these. So if this is going to be in a line, that's fine. Why? Because we've got a wider spread candle. Probably expected to be a little bit greater than that. There's probably some selling in there. Why? Because this candle spread, when you compare it with this volume and you compare its predecessor with its volume, this is only marginally higher, maybe, I don't know, 10% higher. So all things being equal, you would have expected this candle to be only really 10% higher than that. So, you know, about here somewhere, we've actually got a lot more than that, which is why you're seeing a partial reaction against it, because in here was some selling. In other words, if you take this as your benchmark candle, if this is your benchmark for this area of the session, if you will, then you know this looks a little bit anomalous. It's not saying this is going to reverse, but it is saying, well, you know, don't be surprised if you get a bit of a reaction against, because the volume here has driven in. The volume here is not as great as you would expect to see under such a widespread candle. That said, you can see exactly what's happening, same sort of pattern of behavior as here. It looks as though this is going to close with a deep wick to the lower body again, with some decent volume under it. So in other words, what's happening again is the market's reacted lower. The buyers have stepped in again and they're saying, no, we're not going lower yet. We're going to continue higher because you know, we want to buy this stock. We love this stock. That's not to say it will, but it's 2 minutes, so it should close off anytime soon. We'll see how it ends up. It's certainly looking that way at the moment. Volume's building. Sorry, I just moved the chat box out of the way. There we go. Volume's building. Looks as though we're going to get another wick under there. Just wait and see if it does. Okay, so we've got another wick there. So what we're looking at is the buyers stepping in again. Good volume under there. We've seen the volume rising 3 times under there. So, you know, it's just saying this market is, you know, is wanting to push higher. The buyers are stepping in. Every time there's a reaction, in other words, the buyers are stepping in and buying again. So the sellers are getting out. You know, these guys, maybe guys and girls who made their money in here, they've gone all the way up, had enough, got out. So some have sold out here, some have sold out here, some have sold out here. But at the moment, you've still got more buyers coming into the market, prepared to buy at these higher prices. So, you know, we've got buyers who've bought down here, we've got buyers who've bought here, and we've got buyers who've bought here. And we go down onto the 10-minute time frame. Seems very slow, but you know, same sort of principles. Rising volume, rising price, coming up nicely, coming up to potentially a bit of a top at 380. Certainly worth keeping an eye on that. Let's go back and have a look at GE, which is at the other end of the spectrum. It's just to finish, just to see what happened with that. There we are, just sort of going sideways. Hasn't really done very much. Certainly nothing like the price action that you've just seen on the other stock. It's very labored. but then it's horses for courses. And if you're just starting in terms of day trading stocks, then it's all about implied and historic volatility, which we'll cover at some stage. It's identifying which stocks you are comfortable with. A lot of day traders will inevitably look for those stocks which are extremely volatile, which is understandable. Others will look for stocks like GE, which perhaps are much more laboured, less scary. You have to choose what works for you. It doesn't really matter what you're trading. You've got to find what works for you in terms of your approach, your tactical approach, the time you have available, what suits you psychologically. It's why we always maintain, and I say in the Forex education program, the one module you start with is psychology, because if you understand yourself, you will be able to fit your trading to suit your, not only your style, your psychology, your makeup. Obviously, you've got to fit it to the time available if you're in front of a screen or not all day long, but you have to fit it to, what are your strengths, what are your weaknesses, try and fit it to those, and play to your strengths and manage your weaknesses, basically, is what it's all about. Let's just have a quick look at where the indices are. The dollar is coming off a little bit. The commodity currencies, the yen is starting to sell off, which is no great surprise. There we go. Nice deep wick to the lower body here on the daily chart. So there's lots of buying coming on. That's where we've gone through, back up to the volume point of control on all three. I suspect it will probably sit around there for the next couple of hours or so. This is where we are. This is what I'm looking at now. I've got the dollar here very much up into overbought on the hour. The yen here is selling off quite sharply. The Swiss franc is starting to settle. And reverse, we've got the commodity currencies down here. The Aussie is starting to curl. New Zealand, CAD, I'm now looking at that as an opportunity to buy. Once these get down here, maybe a little bit before that, if this starts to roll over and the Swiss and the yen start to follow suit, then that's an opportunity to buy those particular currency pairs. It depends. You have to make a decision. Do I want to hold those through a major decision like the FOMC? Probably not. But again, that's a personal decision. If you've got a big news release coming up, you've got to make a decision. Do you want to trade through that? Do you want to take the risk, the gamble? The answer is probably I wouldn't bother at this stage. I'd just wait for it to come through and then I'd jump in after that. So there we go. I hope you've enjoyed this particular session. Just to show you where all the bits and pieces are, there we go. In terms of the indicators, you can find them here at quantumtrading.com. MT45, NinjaTrader 7.8, TradingView and TradeStation. Anna was on TradeStation 10. The other one I had up, I didn't actually show that in the afternoon session, this session, but it's on TradeStation 9.5. I was showing that earlier on. So they're all available now, up and running. We're working on the TradingView indicators, so we're porting across all the other indicators for that, the currency matrix, currency array, and currency heat map, along with the VPOC and also support and resistance. So they will all be available. If you have the TradingView indicators as a full package, then you will get all of those free of charge. If you don't, of course, then it's perhaps an opportunity to invest in those because you'll get them free of charge added as soon as they are all available. This is where you'll find Anna, annacooling.com. All the books up there on Amazon in both Kindle and paperback. You'll find all the links to the indicators over here as well, and also to the funded Forex program on the education, which is at quantumtradingeducation.com. That's it. That's us done for the day. I hope you've enjoyed this particular session. If you've been to all three, fantastic. I hope you've enjoyed them all, and enjoy the rest of the trading day, in the rest of the trading week, and we will be around and about. If you have any questions, more than happy to answer them. Either Anna at annacooling.com or David at quantumtrading.com. So enjoy it, and we will see you again next week. You're on the list, so you will receive all the details by email, probably on Monday-ish, something like that. And if we do make any changes, as I say, we run these weekly now, so you'll get all the details through every week. So thank you very much indeed. Thank you, John. I hope you've enjoyed it, and we will see you again soon, and bye for now.